Alright, welcome back. Today I'm going to be showing you the session Cumulative Volume Delta. Now this tool is incredibly useful, and especially if the market's ranging, it can really tell you with some really high accuracy whether the market's going to go up or down after the range, okay? So let's get to a chart. Now this is on TradingView. Now regardless of which order flow software you use, doesn't really matter, all of them come with a cumulative delta indicator of some kind, right? Now here on TradingView, we have it at the bottom on the table here, where it says Session CVD. That is the Cumulative Volume Delta. Now in order to access it, you just double click in the footprint, go to Show Summary Info here, make sure Table is selected, and then you can select the Session CVD, okay? And there it will appear. Now what exactly is the Session CVD? Well, what it does is it tracks the delta from the beginning of the session all the way to the end. So if we go to the beginning of today's session, so when the market literally opened, right? So all the way down here, this is where it started tracking, right? So this delta in this candle, the opening candle of today, was negative 92, all right? Or if you add up all the aggressive buyers, buy contracts, all the aggressive sell contracts, subtract them. Altogether, there was negative 92 delta in that candle, right? So the session CVD, because it's the first candle of the session, is negative 92. Then we got plus 171 delta in the next candle. So if you were to add 171 to negative 92, you get positive 79. And it just keeps adding and tallying basically every single candle of the whole session, right? So if we go back to where we are currently right now, so right now, the cumulative volume delta is at 4,000, basically 4,000 to the buyers, right? So that means 4,000 extra buy contracts, aggressive buy contracts have come in since the beginning of the session, okay? Very, very simple. Now that we know what it's showing us, how do we actually use it in our day-to-day trading? Now this is where it gets really interesting, all right? So take a ranging market. Whenever the market is ranging, it's going sideways, right? Neither buyer nor sellers are winning, right? It's just flat. The market's flat, okay? Now, that essentially means buyers aren't pushing the market up, sellers aren't pushing it down. It's a completely balanced flat market. So if we look at the delta that's coming in, cumulatively across the range, imagine if you had now 2,000 extra buyers come in a range, right? And the market remained flat. What would that tell you? If there was 2,000 extra aggressive buyers coming in and the market remained completely flat, what does that tell you? Well, in terms of market efficiency, right, it's telling you that the buyers aren't very effective. They're not very efficient right now, right? Because they've added 2,000 extra contracts and they still couldn't get the market up, right? Whereas sellers, they didn't have to put in 2,000 extra contracts and they kept it flat, right? So if sellers were to put in more volume, there's a good chance they will probably find it easier to push the market down than the buyers pushing it up, because buyers are going to have to put more and more volume to get the market up, essentially, right? So look at it as market efficiency. So here we had a range, right? Granted, it's not the cleanest range in the world, but nonetheless, it's a range, okay? We had a bit of a range here, and you can kind of see, you know, we went up, we went down, we went back up, we went kind of down a bit, then we went back up, and then we went down, and then eventually we broke out, right? Really easy. It's not a clean range, but nonetheless, it is a range. And there's a bit of a longer range as well, okay? So we're going to look at the session CVD, right, at the beginning of the range. Where did the range start? Well, it really started in this area here, right? And you can see that the session CVD, I'll draw it out for you, was at 15,000, so plus 15,550, okay, to the buyers, all right? Now, let's move over to kind of one rotation in the range. So we moved up and then we moved back down. So let's look at the session CVD in this area here. Now it's dropped down to 10,750. So that means 5,000 extra sellers have come in from this point to this point okay? So from here to here, there were 5,000 extra sellers that came into the market. And if you actually look at what the market did, well, it remained flat for the most part, right? Because yes, we did go up, but then we came straight back down to the same place. Yet there was 5,000 extra sellers. Now, if the market is truly balanced, right, 5,000 extra sellers should have made the market drop below that point, right? So what's going on there? There's obviously, the sellers are not very efficient, right? They're coming in, but they're not very efficient. They can get the market down to a certain degree, but they can't really get it down properly, right? But let's carry on. Okay, so that was the first rotation of the range. Let's look at the next rotation, right? We can even look down here. What were we at? We are now at 7,550. So again, another 2,500 extra sellers came in, still couldn't get the market down, right? Let's look at the next one. We're now at 1,000, give or take, basically around 1,000 cumulative volume delta right now. So that means from the beginning, from where we started, all the way to here, right, pretty flat, we went from plus 15,550 to 1,000. That means 14,000 extra sellers came in, right? 14,000 extra sellers came in this whole area. But who actually won? No one really won, right? Whether you bought or sold, the market remained flat, right? And the way you can tell if a market's ranging is you can do a volume profile in that area from the start of the range to the end. And what you should see, okay, a volume profile will always look like a triangle. It'll look like that, okay? Kind of like a sideways triangle, right? That's a ranging market in the volume profile. So if we get the fixed range volume profile tool and just draw it from the beginning of the range to the end, there we are. We have a clear ranging market, right? A nice kind of V-shaped, triangular shaped volume profile, right? Really, really simple. So, back to the session CVD. What is that telling us? 14,000 extra sellers came in. They couldn't get the market down. Who are you going to bet on? Who would you rather bet on, right? If 14,000 extra sellers can push the market down, why would you want to sell? Why would you want to be a seller at the bottom here, right? You know the volume, you know how much volume has come in on the sell side, and they still can't get it down. Why would you want to sell? Why would you want to align yourself with the losing side of the market, with the side of the market that's clearly not as efficient or as effective? The buyers have a much easier time pushing the market up than the sellers have pushing it down. So you really only want to be looking at buying the market in these areas, right? Buying it at the bottom of the range, right? Definitely, you don't really want to be selling it, looking for a sell breakout, anything like that. Now, that doesn't mean whenever you see that kind of divergence, all right, that the market cannot possibly go down. It can go down, right? But it would be a lot more unlikely, because what would happen, what would be needed for the market to actually push down would be a lot more sellers, right? If 14,000 couldn't do it, they're probably going to need 20, 30, maybe 1,000 sell contracts to actually push this market down, overwhelm those buyers. Now, the likelihood of that happening, look, it can happen. Anything's possible in the market, right? Of course it can happen. But when you're looking at probabilities, it's more likely buyers are going to put in a bit less volume. Maybe they're going to be as aggressive. They might put in a few thousand contracts and push this market up, because they can do that. Whereas sellers having to put in 30,000 to get this market down. You'd rather go with the side that only need a few thousand to get the market up, right? Why would you want to align yourself with the less efficient or less effective side of the market? So just in looking at the cumulative volume delta, you could have already had a hunch. This market is probably not going to go lower than this range, right? We're probably going to stay above, okay? And we're eventually going to break out. And we did, right? We did break out. Yes, we started ranging again. We're still kind of ranging, okay? But nonetheless, do you know what I mean? You could have bought the bottom of the range and at least got yourself some kind of a trade, right? Now this also works on the tiniest of ranges, the more tiny kind of, really small few minute ranges, like the one we had here, right? You can see how the market really went sideways. Lovely and compact, right? Let's just look at the volume in that area there. What exactly was going on, right? Now we started the range at plus 1,570, right? And towards the end, we were now at plus 1,170. So 400 extra sellers came in this area, right? 400 extra sellers came in, and this is a 1 minute chart, by the way. So this is a 1, 2, 3, 4, 5, 6 minutes, right? 5-6 minutes, 400 extra sell contracts came in. They couldn't get the market down, right? Again, that's a good indication if you're looking at now buying the bottom of the range. Hey, this could be a good place to buy, right? We're at the bottom of the bigger range. There's a little mini range telling me that the sellers are struggling to get the market down. Buyers are more efficient. Might not be a bad idea to enter a buy. And you can have a super tight stop loss, right? You can have it only a few points away. Okay, and the obvious target will be the top of the range again, right? You target the top of the range. So you can have these really nice kind of, trades. Boom, 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 boom. Would have done it in a few minutes. Beautiful trade. Just by looking at the session CVD, keeping an eye on it, right? And doing that little bit of mental math needed to understand who is more efficient in the market. Okay? Now, again, we've got another range right now. I mean, we're still in that range. So let's actually have a look at what's going on here. So we've got this kind of, it's not a perfect range, but nonetheless, it is a range, right? So let's see what is actually going on. So we started the range around here, give or take, let's say 9,800, right, was the session CVD. Now, back on the next rotation, we were at 5,000 again. Can you see the same thing happening, right? Loads more sellers are coming in, okay? A ton of sellers coming in, but the market is not pushing down, right? And we go to the next rotation. We're now, okay, this is where it gets interesting now, all right? Now it's starting to get a little bit more interesting. Before I show you what I just spotted, let me just walk you through this, right? So at the top here, I'm going to draw a little black line on it. We were at, give or take, 9,000, right? Say 9,800, right? Bunch of sellers tried to come in. They're trying to push the market down. It took them a lot of volume. I mean, look at this volume, right? Huge amount of volume. 2,000, whoops, right? 2,000 contracts here. Another 1,700 contracts, right? And this candle, lots of volume being printed, right? To get that market down. We went from 9,800 to the lowest point, give or take around 4,000. Let's call it 5,000, right? That's about 4,500 sellers coming in, and look how little they pushed the market down, right? They didn't push it down at all. They really, really struggled to get this market down. So by no means would you chase the volume, say, look, huge sellers coming into the market, we must short, short, short. Not quite. The sellers aren't being very effective, right? Now look at the same for the buyers. When we were at the bottom here, we were at 3,700. And the buyers pushed it back up to this black line, to the top of the range. And it got, at the top of it, it was basically 5,000. So from 3,700 to 5,000, meaning basically 1,300 contracts, buy contracts, to push the market up, versus, I can't remember how many this was, 4,500 sellers to push the market down in the same amount. Buyers are still more efficient, correct? Right? But now, what I want to show you is the change, right? Notice how you're seeing slowly a little bit of shift in the efficiency of the market, right? Sellers pushed it down again. We went from 5,000 all the way back down to about around 3,000 here at the low. Okay, so that was another 2,000 sellers came in, and they pushed the market down. Granted, not as low down, they're still not as efficient. And then we went from, you know, around 3,000, and the buyers pushed it back up here, back up to about 5,000. So the buyers are still, again, equivalent, right? Another 2,000 for the buyers to get it back up. Do you see how on this leg down and this leg up, the buyers and sellers were actually about equal? It took sellers 2,000 contracts to get it this far down. It took buyers about 2,000 contracts to get it this far up. They're starting to balance out now. The efficiency is now starting to slowly become 50-50. Let's look at the next move down, right? We went from, give or take, I'll say about 6,000 here, all the way down to 2,500 here, say 3,000. So again, another 3,000 sellers to push it down this far. So slowly, that gap is slowly starting to close. Do you see what I mean? Buyers and sellers are slowly starting to become as efficient as each other. It's still a buyer's market, but nonetheless, sellers are becoming a little bit more efficient. Now, this is a big range, right? So it's you know, it's easier to do on smaller ranges. So let's find really small ranges. So we had that obvious one there. We got another one, really small one there. But maybe this one here. You see how we went sideways? Right? Just this area here. Let's look at the volume, right? So we started off at 15,120. Towards the end, we were at 12,410, right? Give or take. Now, a bit before we were at 14,000. So give or take, you know, a few thousand contracts on the sell side came in more in this area, and they couldn't push it down. We went sideways, completely flat, right, here. A few thousand extra sellers came in. You're not going to want to sell, right? The sellers are far less efficient. And if we do a volume profile, just on this little area, you can see that triangular shape, right? It's behind the candles, but you can kind of see it. That triangular shape, right? And that's essentially all you're doing with the session CVD, right? You're looking for when the market goes sideways, and you're trying to measure the efficiency of the market, okay? And you can do that with legs that are the same kind of size, right? Like from here to here. This is the same leg, just undid itself, right? It went from here, and it went back down to here, right? So you can look at the, you know, the volume that came in to push the market up. It started at 7,550, went all the way up to 9,360. So that's what, 15, 16, 17, 1,800 contracts, buy contracts came in, right? In this move up, an extra 1,800 buyers pushed the market up that much. Sellers, on the other hand, went from 9,300 all the way down to 1,000, basically 1,000 flat, right? So 8,000 extra sellers in the same move down. Obviously, it's a buy, right? Obviously, buyers are more efficient. Like, that is a really obvious one. It's not even like, it's a couple of contracts here and there. It's not really flat. That's a clear, yes, it's a buy. You should not be thinking of a sell at any point. You need to be looking at buying, okay? Because the sellers are just not good. They're not efficient. They're posting so much volume, but they're just not getting the market down to the same degree. They're not moving the market to the same degree as buyers are with similar volume. And that's essentially how you use the session CVD, right? You're just looking for something that doesn't make sense. Which side of the market is more efficient? Which side isn't? Okay? And you can see, you know, in this range at the top here, as I explained a little earlier, you can see that shift slowly starting to happen, right? Buyers and sellers are slowly starting to equal out. So I wouldn't be surprised now if we actually do potentially break down to the lower side, because the sellers are very aggressive, right? They're happy to post a lot of volume, and they're finally starting to be a little bit more effective with the volume that they're posting, right? And we can look at, you know, just this move up. this really micro move, right, from here to here, and compare it to the move from here to here, right? So from here to here, we were at 2,500. To the top, we were at 3,690. So basically about 1,100 buyers it took to push that up. Whereas from here, we went from 3,000 to the low, which we're currently at, is about 1,500. So still, sellers are still less efficient than buyers because sellers required more volume to push it down, but the gap is closing. All right, it's starting to close a bit now. Okay, it's not as extreme as it was earlier, where, you know, we're talking 14,000 sellers and only a couple of thousand buyers. They're now kind of almost equal. So sellers are going to have a lot more chance at pushing this market down. They're going to be a lot more better at pushing this market down. The market can fall easier now, right? So I wouldn't be surprised if the market does actually start slowly tilting into the seller's favor, right? And potentially start looking for shorts if we get to the high top of the range. I wouldn't anymore be that against selling at the top of the range now, right? Just because, like, I wouldn't want to sell at the bottom of the range, of course not, right? I'm not going to bet that this is going to be a breakout, that's risky. But if we make that rotation back up, you know, to the top of the range, yeah, if the cumulative volume delta still kind of shows that that gap is closing and, you know, sellers are actually picking up a bit more steam, I wouldn't be against shorting it, right? Over the kind of period of time, at the beginning of this range, buyers were a lot better, and slowly as we started rotating, sellers are becoming better, right? The buyers are still better overall, but the sellers are closing the gap. It's like a race, right? Like two sprinters. Before, the buyers were way ahead and the sellers were far back. But now the sellers are closing that gap. They're starting to overtake, right? Meaning, if they keep that kind of momentum up, they're going to become more efficient than the buyers, and this market can actually start plummeting down, right? So read the market as efficiency. Which side is more efficient? And you do that with the volume, right? With the cumulative volume delta, makes it really easy for you to kind of see that efficiency. Don't be afraid to measure a leg, measure the other side of the leg, and compare the volume. Does it make sense, right? Always ask yourself, which side would you rather be on? You always want to be with the more efficient side of the market. You don't want to be fighting, struggling, you know, being with the side of the market that needs so much more volume to get the market going. No, you'd rather be on the easy side of the market. So that's pretty much it. That's how you read the session CVD. At least that's how I do it. I've got a lot more stuff coming, so do hit that subscribe button. Join me on my lives every single day. I trade Monday to Friday, New York Open, trade every single trading day. So do join me. I go live, we trade. Everyone in the chat likes to have a good, you know, it's a great little community. Everyone's super happy, super friendly. Come join, pop by, say hello. I'm sure you'll love it. But apart from that, thank you guys for watching, and I'll see you again very soon. Take care for now. Bye-bye.